Prime Minister yesterday, he wasn't so grateful. But they should be grateful to us. Canada lives because of the United States. Remember that, Mark, the next time you make your statements.
As you know from real estate, there are some places that are never for sale.
That's true.
We're sitting in one right now, Buckingham Palace that you visited as well.
That's true.
Having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale.
Something big is happening in Canada. A few weeks ago, Canada added 75,000 jobs in a single month. The United States lost 23,000 in the same month. Unemployment here dropped to a 2-year low. That is not supposed to happen to a country getting squeezed by its only real customer. Something has shifted in how this economy works, and it's been building quietly for about a year and a half. Take the jobs number first, because it wasn't close. Economists expected around 20,000 new jobs in July. Canada put up 75,000. The unemployment rate fell to 6.4%, the lowest since July 2024. And that's 3 straight months moving the right way. Ontario alone added 52,000. The gains were spread across wholesale and retail finance and real estate professional services and construction. Since April, the country is up 181,000 jobs. The quality underneath the headline holds up too. The gains were split fairly evenly between full-time and part-time work. And over the past 3 months, full-time positions have grown by 193,000. While part-time work actually shrank. That matters because a jobs number built on part-time hours falls apart fast. The labor force itself grew by about 61,000 people in July, meaning more Canadians started looking for work, and the economy still absorbed them and pushed the jobless rate down anyway. The share of unemployed people who found work rose to 20.8%, up from 18.5% a year ago. More people looking, more people hired. The growth numbers back it up. Earlier in 2026, plenty of people were warning Canada was sliding into a recession. Instead, the economy came back with the second quarter, pointing to growth around 3.4% on an annual basis after a weak start to the year. The Bank of Canada held its rate at 2.25% in July, with the next call coming in early September. Bloomberg's editor-in-chief has pointed out that Canada has outperformed the United States, the Eurozone, and global markets since Mark Carney took over in March 2025. So, how does an economy do that while the biggest buyer next door keeps raising the cost of selling there? The answer is that Canada stopped waiting around and went shopping for new customers. For generations, Canadian trade policy was simple: sell to the Americans. It worked, and nobody had a reason to change it. Roughly 70% of Canadian exports still head south. Previous prime ministers never had to seriously plan for a world where that relationship turned unfriendly. Carney's government has made getting out from under it the whole job. The reason is not complicated. Once the tariffs started and the talk about Canada as a 51st state began, it stopped being possible to treat the American market as a safe bet. When one customer buys 7 out of every 10 things you sell, that customer sets your prices, your terms, and your future. Every Canadian industry that lived off that relationship found out at the same time how little leverage it actually had. The choice was to keep hoping the mood down south improved, or to go find other buyers. Ottawa picked the second one and moved fast. The pace has been relentless. Deal after deal, continent after continent, roughly 20 trade and defense agreements in about 18 months. The biggest one came out of the Gulf. In November 2025, Carney went to Abu Dhabi and came home with a commitment from the United Arab Emirates to invest 70 billion Canadian dollars into this country. That's about 50 billion American. Not a vague friendship statement either. Officials described it as money to be put to work over roughly a 1-year window, aimed at ports' critical mineral mines, LNG data centers, and artificial intelligence. For a country trying to pull in outside capital, a $70 billion check from one of the largest sovereign investors on Earth is a serious vote of confidence. The UAE relationship kept moving fast after that. An investment protection deal signed in November came into force in May of this year. Then, on July 24th, 2020, 6 trade ministers from both countries announced they'd finished negotiating a full economic partnership agreement. which cuts tariffs and opens market access both ways. Carney and the UAE president celebrated it on a call on August 5th, and both sides called it the fastest deal of its kind either country has ever negotiated. The goal is to double trade between the two countries from about $3.5 billion to $7 billion within a decade. Out of that same trip came something smaller in dollars, but bigger in the long run. Carney announced a project worth over $1 billion to expand critical minerals processing inside Canada. That word processing is the whole game. Canada has always been good at digging things out of the ground and shipping them raw to somebody else, who turns them into something valuable and keeps the profit. Oil goes south and comes back as gasoline at a markup. If the same thing happens with lithium, nickel, and copper, Canada just repeats the mistake with new rocks. Building the processing here is how the country finally keeps the money at home. Saudi Arabia was next. In July 2026, Carney became the first Canadian Prime Minister to visit in 26 years. That trip produced 13 commercial agreements and memorandums worth over $1 billion, covering health, technology, mining, infrastructure, and defense, with talks continuing on AI, energy, and critical minerals. India came earlier. In March 2026, Carney locked in a new partnership focused on trade technology and economic cooperation, reopening a relationship that had gone cold for years. Alongside it came a major uranium supply arrangement, which matters because Canada has some of the best uranium on Earth, and India is building reactors to power a country of well over 1 billion people. That's one of the world's fastest growing large economies, opening up to Canadian resources, technology, and food. Then there's Europe, and this is where it stops being about trade and starts being about something deeper. Canada and the European Union built out a strengthened partnership covering trade, security, and defense, and Canada has since joined a European Defense Initiative. Out of that came a 20-year deal to ship Canadian LNG from British Columbia to a German energy company. Europe wants gas that doesn't come from Russia. Canada has gas. That's a 20-year customer. And then the submarines. When Canada moved to buy as many as 12 new submarines, the largest military purchase in this country's history, it did not go to the Americans. It went to a German builder. Sit with that for a second, because defense procurement is usually the last place a country breaks from its closest ally. Canada picked Europe, and it did it with more than half the public on side. That single decision ties Canadian defense to European industry for decades. The rest of the defense picture points the same direction. A $2.3 billion Arctic military satellite contract, a new quantum defense hub, higher defense spending overall. This is a country building the ability to watch and defend its own territory instead of assuming the neighbor will handle it. Put it together and the pattern is obvious. India, Saudi Arabia, the UAE, the European Union, Germany. Every one of those deals is a market, an investor, or a partner that doesn't need Washington's approval. For regular people, this is less abstract than it sounds. A port expansion is jobs on the coast. A critical minerals plant is jobs in a mining town that used to ship its rock away raw. An LNG contract locked in for 20 years is steady work in northern BC instead of boom and bust. A submarine program is decades of skilled trades work in Canadian yards. That's the argument for all of this. Not flags and speeches, but paychecks that don't depend on who won an election in another country. The next few months will show how much of that strong summer holds up once the new costs work their way through. But the direction hasn't changed. In about 18 months, Canada has signed more than 20 trade and defense agreements, secured over $28 billion in international sales, pulled in record foreign investment, and put up the best stock market performance among the world's major economies. Unemployment is at a 2-year low. Growth has bounced back hard from a scary start to the year. And a country that spent its entire modern history organized around one relationship is now building a web of partners across Asia, the Middle East, and Europe. That's the big thing happening here. Not one announcement, not one number. A country quietly rewiring how it makes its money in real time while getting hit from the south the entire way through. Whether it works depends on the boring part that comes next. Turning signed paper into shipped goods pledged billions into built ports and mines, and new partners into steady customers. The deals are done. The proof comes in the years after. But the strategy is no longer a theory. For the first time, the numbers are starting to move with it. And that's a lot more than anybody expected from a country everybody assumed had no choice but to take whatever it was offered.